Hey guys, am I good? I'm good. Good. See my face? I'm good. Ladies and gentlemen, we're going to show you how just smart trading is really just the overall key to consistency. Or we're going to show our precise daily stock levels, our game plan in Forex, as well as our full stock analysis. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. So many great things to talk about. I'm going to show you how to read the market, why, I think things could go up or down in the market, what kind of day it's going to be before the market actually opens, how we predicted it today, how we traded it today. We're going to go through that and so much more. But first, your screen is going to turn black, and we're all going to hold hands and we're going to chant, "Appear yourselves, O compliance lords from above at T3, and show us what we must memorize before we can push forward." Kindly pause this video, read everything here, and notice that everything I say on this show should be interpreted for purchasing shoes and pocketbooks at Chanel only. Thank you so much for reading all of that. And let's go ahead and talk about what we could do. You memorize it backward, Raheem. You have to memorize it forward too. Otherwise, you have to go back, pause, and you know what to do. All right, so we came in this morning. Market was gapped up. And I'm going to show you such an easy way. And the first thing I said when the market gapped up, what was the first thing I said? Guys, we're probably going to go red today. So it wouldn't surprise me if we pop up today, but we're going to have big down moves throughout the day. How does that bring value? How does that bring value? Does that sound like an analyst who takes, $190 Apple and lowers the price target from 250 to 240 and says that he's lowering his outlook even though it's much higher? Of course not. We try to bring you value here in the Newsbeat live room and try to give you trade ideas which can generate alpha for your account on a pretty consistent basis. And by pretty consistent, I mean by far none. We have the most consistent traders on the planet. Again, if compliance is watching, there's a 99.723678% chance that that is true. So with that being said, I looked at the market, I looked at the pre-market volume today in the Qs, and I said the market's going to go red today. Now you have to realize on the Qs that we opened up at 167.11. The Qs gapped up and we shot up. I'm going to go ahead and just show you just a simple 5 minute of the Qs today and pretty much what it looked like. And we started shooting up here. We pulled in and then we started going up. And I basically said in the morning, right over here at 9:40, after the Qs shot up to 168.48, that the Qs were officially up $2.15. I said there's a coin flip, we're going red today, and look to buy puts. Now my strategy today was every time we have a big down move, look to go long. Every time we have a big up move, look to go short. Sounds kind of simple, right? But calling it in real time is a different thing. So started off this morning and I was calling for Apple to go higher this morning. And even though it was downgraded at Goldman, Apple ended up shooting up. Okay, the trade happened. And then what I was looking at, and I'm just pointing it out because what is the value here? You tell me what the value is to you. If you have somebody telling you right as the morning begins that Apple's going to climb up, and it opened up at 191.72 and went to 195.22 in a matter of 10 minutes, it went pretty much, what is that, 3.5 points? 3.5 points in a matter of 10 minutes. What kind of value is that to you? Okay, maybe yes, maybe no. I'm going to show you how I did it in a moment. Then what I did was I sat on my ass and I waited. And by the way, according to compliance, I cannot confirm to you that I actually have an ass. That is, there's a 92.3% chance that I do have an ass. So I sat on my something. I was sitting on something, I believe. And what happened was the market shot up here and the market was shooting up here. And what did I say? I said, guys, if the Qs hit 169.39, which is my trend line resistance level, right over here, and this was done in real time. I said, I'm going to buy puts. Why? Because I said if the market shoots up and starts ripping through highs, I'm going to buy puts. Shot up right here. I ended up with Facebook puts right over here. And literally, as I bought the puts through one, it hit like 169.39, 40, 41, 42. I went ahead and I bought puts. The Qs went 6 cents against me, went to 169.48, and just defecated all over itself. Again, that would also be an insinuation that the Qs also have a bot. And how I was able to do this was with this trend line. Now, again, I know I offer a trend line course, and I'll tell everybody who hasn't taken my trend line course, you're probably drawing trend lines incorrectly. Mark, you know how many people have been trading longer than me? I mean, I've been here just under 20 years as an intraday trader. You know how many traders in the room have been trading 30, 40, 50, 60 years? 60 years. Yes, we do have 60-year traders. We have traders in our 90s in the room, which is like mind blowing. Then we have traders who can't legally buy a beer either, and everybody in between. So looking at that, I will tell you that if you're not using my trend line methodology, you're probably drawing trend lines incorrectly. Now, it's not coming from a place of conceitedness. It's not coming from a place of cockiness. The way you're drawing trend lines is used as an estimation. The way I draw trend lines is a way to get in intraday trades, understanding a methodology, and profiting from them. And if you're not doing that, you're drawing trend lines incorrectly. So if you want to know how I called the dead top of the Qs today, tell me if you were able to do this with your trend lines. Tell me if you were able to draw, and again, I'm doing this in real time before it hits. I'm not Captain Hindsight over here. I do it in front of a room of hundreds and hundreds and hundreds and hundreds and hundreds and hundreds and hundreds of um, traders and people. And again, I can't confirm to you that they're people. Maybe they're robots who want to pay for a subscription to the Newsbeat Live community. With that being said, draw a line from the top of October 17th to the top of November 2nd. If you draw that line, you will see where the resistance is in the triple Qs. You will see how obvious it is. And if you were to draw that line, I'll delete the other lines just so you could see it here. If you were to draw this line, October 17th to November 2nd, this is what the Qs would have looked like in real time. You see this yellow line here? This is my trend line. Here's the Qs where it opened. Hits it exactly, magically falls. And what did I tell you guys as it was happening? Well, if you're listening in, I'll tell you if you weren't in the Newsbeat live room. I was basically telling you guys this is where every single trader thinks the market is going to break out, and it's going to do the exact opposite. So right when the Qs were just at that dead top, I went ahead and I bought puts in Facebook, which, of course, crapped itself lower right afterwards. Not a coincidence. Not a coincidence. Of course, didn't matter if you bought Facebook. Didn't matter if you bought Qs. Didn't matter if you bought Amazon. Didn't matter if you bought Netflix. Didn't matter if you bought one of the banks short, or excuse me, bought puts in one of the banks. The point is, if you were short just about everything, yeah, you'll find the name that was going up all day. I get it. Congratulations. But pretty much if you bought anything there, you would have made money. So, how did I do it? How did I do it? How did I know the market was going to have large down moves intraday? How was I predicting that there was a great chance we would go red today after we shot up in the morning from the triple Qs? Pablo thinks it's ESP. Maybe I was conversing Colton with the Krypton aliens. But again, I can't confirm that for compliance. Personal space, volume, volume. Right. So here's the deal. It's a combination of volume and something else. So when the Qs you have to look at the pre-market volume, ladies and gentlemen. You're right, the screen's going to get bright, okay? You have to look. So Qs or SPYs, doesn't matter. Whichever one you prefer is irrelevant to me. I like the Qs because I used to be an Apple trader back in the day, and it used to only be weighted on the triple Qs. I know it's heavily weighted now on the spiders. I get it. But look at the pre-market volume. If the Qs are 800K plus, or the SPYs are 900K, and this is in the current environment. It used to be that this number, for example, if you went back 6 months ago, this number would actually be about 550,000 on the Qs and 600,000 on the spiders. based on the elevated volume on October, you need a little more to be considered near-term elevated volume. So this is, as of now, this will probably last till the end of the year in terms of this volume. Here's the value I'm bringing you. Pay very close attention right now. You're going to learn something very, very important. So if the Qs have 800K plus volume, or the SPYs have 900K in the pre-market, again, we're watching the pre-market, bearishness is likely for larger intraday down moves. So automatically, so I know this, I know we're going to have large intraday down moves already before the market opens. And we're gapped up. We're gapped up. We're gapped up, and I already know we're going to have large intraday down moves. What does that mean? In my opinion, we're having large intraday down moves. And of course, I think you'd have to, I don't know what you consider large, but I considered what happened today large. So basically you look at that. So now step 2, look at the daily chart. So on the triple Qs, again, I really don't care if you're using the spiders. I really don't care if you're using the triple Qs. Let's use the triple Qs, for example. So we had a big red bar yesterday on the Qs, right? Same with the spiders, right? And then what happened was we were opening up right inside its range. What does that mean? It means because we're going to have large intraday down moves, we're probably on a bear flag digestive pattern. Here, you know what? I'm going to make it so easy for you to see right now. You guys are going to love me. Look at this. Watch this. Watch this. Okay. So right over here, this is what I am judging it on, right? I didn't know how today was going to look like. However, I did know that we were going to open up here because I saw where the Qs were trading in the pre-market. I did know I didn't know what today was going to look like because this is the morning. I would actually need ESP in order to do that, but I knew we were going to open here. And so did you. Because at 9:30 you see where the Qs are trading, you know the general number of where it's opening, right? I mean, I think that is pretty obvious. So when you see this formation here and what's highlighted in the yellow box, this is what I think. Look, notice how we had 3 volume days of elevation. This is what I think. This is what I think. Bear flagpole. Now on a bear flagpole, we also tend to follow through on a bear flag digestive pattern. Now we all know that when you get a bear flag pole, that you get a bear flag digestive pattern. And you might stop and you might stop and you might ask, well, Mark, why was it, a bear flagpole? What is a bear flagpole? How about that? How about I show you what a bear flagpole is? Because there really is science behind it. There is a science behind it. There is a science behind it. We could talk about bull and bear flags and wedges, and we could talk about these things. What a bear flag is just simply a result of a fall down in a stock and then a consolidation. It often results in a major drop. So notice the first thing I said there. Move is often the length of the prior flagpole for a follow through. And then we could talk about, certain examples of what flag wedges look like and what, bear flags look like and how they resolve. And we could talk about all these things about bear flags in the past of the spiders and which we read correctly and made money on. But, let's keep it very simple right now. Here's a bear flagpole. Why? Because you are elevating in volume to the downside. So the first part of the bear flag, read that first line, that's a bull flag, excuse me. Here's the bear flag. Result of a fall down in a stock and then a consolidation. So when we gapped up today in the market, what was the first thing I thought before the market opened? That we were going to have a consolidation. Now, in a bear flag consolidation, you are bearish pretty much short of something miraculous happening. What miraculous would need to happen? The Qs would have need to pop up $12 and hold above that level to completely negate the flag and close over resistance lines. It wasn't happening. 0.00000000001% chance that the Qs were going to do that today, right? We probably weren't going to be up $15 on the Qs and $25 on the spiders. I mean, that probably wasn't happening today, right? I think we can all accept that. So automatically, I know we're going to have a digestive pattern today. Now, let me ask you this. Guys, on a bear flag digestive pattern, are you bullish or bearish? What does a bear flag digestive pattern usually ensue? Bearishness, of course. Generally, exactly, you're bearish. Okay, sounds obvious. Now, when I came in the morning, the volume was what? Over a million in the Qs. The volume was over a million. The Qs had 1 million plus volume, which is greater than 800K, right? Qs had over a million volume in the pre-market. So what does that mean? When you have elevated volume, when you actually have elevated volume like this in the Qs in the pre-market, the odds of breaking the prior day low on a bear flag increase substantially. It increases absolutely substantially. So when I'm coming in and I'm like, I'm going to, if the market goes up, it's bearish. If the market goes down, it's bearish. If the market moves sideways, it's bearish. What do you think that means? It means that I'm looking for a down move no matter what happens, right? I'm looking for a down move on anything, right? So let's logically speak. Let's logically talk. We know at this point, we know we're going to have large down moves today. I said it in the pre-market. I said it after the open. I said it after we spiked up off the open. I knew we were going to have large down moves today. How would you take advantage of that right now? Tell me your strategy right now. I want to hear it. You're confident that you're going to have large down moves in the day. Don't just say buy puts. Where? When do you do it? How do you do it? If you know that you're going to have intraday big down moves and you're not going to grind up all day based on the elevated volume. If the Qs had like 100, 200,000 shares of volume, you know what I would have told you guys? Let's look to get something long on support and ride it out for the entire day. That would have been my strategy. Just because the Q's volume completely changed the way I traded today. Look for resistance area to short. That's a good one. You could do the low one and done. How about this? How about let's keep it stupid for a second for us college dropouts here. There's a 89.76% chance I dropped out of college. Let's keep it simple and stupid. How about not when everything craps Kyriakos? The exact opposite. How about when everything goes up? Because you're going to have a large down move throughout the day. You know you're not going to keep popping up throughout the day. At least we knew. I know they don't talk about this everywhere because people don't understand how the algorithms truly work. And if they did, they would understand the algorithmic trendline analysis and they would make statements like we said in the morning that the Qs were going to have and the spiders were going to have large down moves throughout the day. So let me ask you a point. Not even the time, Shane, it's not about the timing. Yes, that would have worked, Shane, but it's not about the timing. It's not about the timing. It's about if you told me the market's going to have a big down move today, do you think I want to buy the market when it's plummeting down and at day lows and buy puts there? Why not just wait for it to go up? You're going to get a big down move. Wouldn't you want to? All right, you're going to have a big down move through the day. Do you want to short the Qs by day highs, day lows, or in the middle of the range? Of course, exactly. You want to short it at the day highs. Do you know when it's going to make day highs? Do you know how it's going to make day highs? I had no effing clue how it was going to make day highs. I didn't care. You know what I did? And oh, I was sitting on my hands all day. I was sitting on my hands all day. So here's what happened with the Qs. This is how it worked. Check it out. You're telling me other rooms talk about this? Show me that room. I'll sign up. I'm serious. Shameless. I'm not even promoting. Truth. Truth. What did I wait to do? Q shot up here. You had a short up shot through day highs. You had a chance to short here. I missed it. Fair enough. Wait. What did I say? Wait for the Qs to shoot through day highs again? When we were right in the middle? We shoot up, we shoot down, we shoot up. There was no conviction over here in the middle. Q shoot up to day highs. We hit an algorithmic resistance line. Buy puts right at the day highs. Take it light, look for a bigger move. Take it light, look for a bigger move. We were buying the 144. I bought the one. I mean, some of you got better prices than me. I saw $1.67 go off. I bought the puts at like $1.73. I think the day low was like $1.66 or $1.67 on the puts. And then it shot up. Oh, and do you know what I did early with Alibaba? Based on this, I waited for Alibaba to crap itself down here. I bought calls very light so I wouldn't get stopped out. Baba went against me. I paid 99 cents for the calls. You know, I got 99 problems, but Alibaba definitely was not one. I paid 99 cents for the calls. The stock tumbled. The stock tumbled down to 69 cents on my calls. I'm down 30% on my calls. 99 cents to 69 cents, but I'm light. So I sat back and I'm like, cool, no problem. I'll sit here and I'll wait. That's exactly what I did. And what happened afterwards? Those calls went from like 69 cents to like $3 and change. Like $3 and change. Was it more? Was it four? Did it hit four? So from 99 cents an option to 69 cents to $4 and change. Do you guys understand why I said this morning before the market opened that I would rather have you make a bigger move on a smaller amount of size as opposed to a smaller move on a large amount of size? The reason I said that again, and I might say it again tomorrow. Let's see how the market opens. We'll see. We'll see the volume. The Qs will give us our answer for how to trade tomorrow. You see, so many people, they try the same strategy every day. That's why you are not consistent. If you think you could come in and do the same type of trading every day, that's why I said mix it up. Use more limit orders. Take smaller size. Catch larger moves. There's a time and place for everything. There was a time and place for everything. So did I get shaken out of Baba when my calls dropped? If I had 200 calls of Alibaba and I was down 30 cents and I was down 6 grand, I would shit a brick. And again, there's only a 21.6% chance that I can actually drop a brick. But I wouldn't hold it for that down move. My calls would go from 99 cents to 89 cents, and I would be down $2,000, and I'd be like, screw this, I'm out. And then I would have watched Alibaba go all the way up to $4, and I would have been that person saying, I could have made $80,000. I could have made $80,000 or $60,000. Wah! If I held all my calls. That would have been me. Well, that's never me. That would have been me. Instead of taking 200 calls, why not take 20 calls, 10 calls, 5 calls, 30 calls? You take 20 calls, for example. You're putting $2,000 down on the table. The stock right over here, goes against you. You're down a whole $600. As beaten up as you were, you're down 600 bucks. Not the best feeling. And then you blink. You go like this. And then all of a sudden, Baba rips up and you're green. All of a sudden, you're up $600. Just like that. Then for whatever reason, if you decided to hold it longer, you could have been up 6 grand, $6,000 on those 20 calls. I'm not saying you caught 6,000. I'm saying even if you caught 600, you caught 1,000, you caught 700, you caught 800 on a 20 call position. Maybe you're in 5 calls. You're in 5 calls. You're down $150. Those 5 calls could have been worth over $1,500 today. You know how well you got shaken out of your position? Not at all. So when I was buying Facebook puts, I bought it light up here when it was at dead day highs. I bought it. It was right over here. This is where I bought Facebook puts. Right over there. Right over there. Dead high of Facebook, as we call the dead top of the market. Did I know Facebook couldn't have gone up over 145 and then pulled in? Of course it could have. Of course Facebook could have done that. But one thing was for sure. I had a size where if it went against me, I would have been comfortable watching, saying, odds are this is going to go in my favor. Odds are this is going to go in my favor. Odds are this is going to go in my favor. And I'm light enough where I'm not getting the shit kicked out of me, based on being too heavy in a position. And I'm not getting through, and I don't need any psychological toxicity. I'm not sitting there watching a huge red P&L on my screen. Now, in the case of Facebook, it worked right away. In the case of Alibaba, it didn't work right away. It worked after 7 minutes. 7 minutes. I had 7 minutes of it going, 5 minutes of it going against me, and then 2 more minutes and it worked. So what's the big deal? Keeps you in the game without getting TKO'd, Alpha Wolf. Exactly. No Street Fighter puns intended. And if you think there's going to be a big down move in the market, it didn't come randomly out of left field. The whole market was telling us throughout the entire day that we could go red. That is why, even when I shorted Facebook at day highs here of the Qs, the day highs of the Qs was 169.48. So keep this in mind. The Qs were up $3.15. $3.15. The Qs were green, $3.15. And you know what the first thing I said when I bought Facebook? I said, Facebook should go down here because I feel the Qs are going to go down here. And remember, guys, there is still a good chance that we go red today while we're up $3 and change. Did I hold for the entire down? No, I caught a small move. Well, larger than that normal, but a smaller type move in Facebook I caught. You make 500, you make 1,000, you make 1,500 on a day like today, 2,000. Today, today. You don't need to stress yourself. The market is whippy. The market is directionless. The value we brought you is we told you it was going to happen before it happened. Besides for calling the top of the entire market today. Besides for that, we showed you how it was going to happen. So when you see the market tomorrow, this is what you should look for tomorrow. Okay? What is this? This is a bear flag digestive pattern. Notice how we elevated in volume again. Remember at 11 o'clock I said we were on pace to break 62.5 million shares? We actually barely did it by 64.1 million today. So right now the Qs are gapped up after hours. We're gapped up $1.17. We're gapped up $1.17. Let me put it this way. I'll tell. How about this? I'll tell it right now how I would judge it. If the Qs, ladies and gentlemen, at right before 9:30 a.m., not at 9:30 a.m., like 9:29 a.m. in 59 seconds. How's that? Give me a second here, wouldn't you? If we have over 1 million shares in the triple Qs, and I'm looking at a chart that looks like this, you know what I'm going to say? What am I going to say? I'll tell you what I'm going to say. That we're going to have very large down moves throughout the day. And I'm saying it right now with the Qs gapped up $1.17 after hours. The Qs are gapped up $1.17 after hours. If we have over 1 million shares in the Qs tomorrow, we're going to have large down moves throughout the day. So where do you think I'm going to buy puts? Where am I going to buy puts if we're going to have a large down move tomorrow? What kind of range am I looking to do it? How about we look at the Newsbeat Live algorithmic levels? We gave you 169.05 on the Q's resistance yesterday. We hit 169.48, but in real time, the level was by 169.40. We tracked it and we shorted the dead top of the triple Q's. How about those algorithmic levels for tomorrow? I tell you guys this every day. Screenshot this, take a picture. It's free for you to use whether you're in the room or not. Granted, you won't hear me calling out trades off these levels if you're not in the room, because at this moment, there's a 7.2% chance that I could communicate with you telepathically. Do not tattoo these levels on your face. They change every day. If they didn't change every day, definitely tattoo these levels on your face, body, or a place that you could see. Definitely not on your backside. All right. And with that, how about we talk about my game plan name that I'm watching? Look, so I gave a strategy yesterday that teaches you how to trade AAP for a long tomorrow. If you applied it with some of the names today, we were talking yesterday about light, cruise, and PCG, the 5 minute thing, and a lot of you guys made money on that today. Congratulations. In all truthfulness, I didn't trade light, cruise, or PCG today, but I did make money in other spots. Here's the thing. So, see this AAP? See this AAP Advanced Auto Parts shot up on earnings, closed near the highs. What does that mean en inglés? En inglés, what does that mean? I'll tell you what it means. You're going to look for, as soon as the first 5 minute bar closes tomorrow, the next time you see another bar trying to hold above there, the odds of us breaking 185.50 in AAP become increased substantially. According to my recent 1 month methodology, over 90, well, a little under 90%, but about 90%, 89.1%. So close enough where you have to look at it and say, damn, damn, I have to take a keen eye on that. So watch that for AAP. There's a good chance we break through 185.50. If you want to know how I'm going to trade it or how I would look for it to break 185.50, watch yesterday's Newsbeat show. We share with you this awesome free education. Take advantage of it. Make yourself a better trader. How about my Forex trade? Duh. My Forex trade. Duh. Here's a live screenshot from my trading account, from my Forex trading account. It's a screenshot of my order window. I have one order. It's a buy, 4 US standard lots, New Zealand Canadian. There's my bid. There's my stop loss. There's my take profit. Very simple. I spell it out for you. Teach a man to fish, feed him for life. Give a man a fish, feed him for a day. Well, I'm pretty much giving out fish 5 days a week, so I'll feed you for the majority of the week. These are my Forex ideas. These are where I put in my orders. And with that, ladies and gentlemen, I hope you guys are really enjoying this talk because it really takes trading sort of, in my humble opinion, to that next level where we could start reading what the robots are going to do ahead of time. You have to realize the majority of the market volume is being done by robots. The majority of the market volume is being done by robots. So being able to understand these robots, especially ahead of time when we can, especially reading them ahead of time, reacting upon it, making money upon it, is one of the most prepared ways to be to be consistent in this market. I mean, there was a time back in 2011 where I would look at the market and I had 12 years as a trader under my belt, and I'd look at the market and I would have no idea if it was a good trading day or not. Now, when you combine it with news flow and you combine it with algorithmic volume and algorithmic trend lines, it paints a deeper picture. There is so much more to trading than what you see on your chart. And until you guys understand that, you might have no reason why the Newsbeat Live Room is potentially the largest, fastest growing trading room in the nation. Happy trading, make money. We'll see you guys tomorrow on the Newsbeat Live trading broadcast. Have a wonderful evening.